Welcome to the Connected Enterprise Podcast. This is Carl Lewis, your host from Vision33, and my guest today is Saied Omar. Saied is a finance and real estate expert and is a podcast host also. We've got a little bit in common. Saied, tell us about yourself and your background and a little bit about how you got into this podcast business.
First of all, let me thank you, Carl, for having me on. I appreciate it. It all started back for me when I entered the real estate space through commercial lending around 2011, 2012. So during the start of a prosperous time.
Yep.
And really, all I've seen is a prosperous economy. And we'll get into it a little bit later, but that's in large part the reason why a lot of people out there that are spreading the optimism, that's all they've seen or that's what they've gotten accustomed to. And I've really become somewhat of a historian, if you will, in looking back at previous recessionary economies, even though they're all snowflakes, and trying to understand that, look, trouble might be on the horizon. So let's be a little bit careful. Over the last 10, 11 years, I've built a good bond with one of my coworkers who we've actually been friends with. I've been friends with for quite some time. Chris Nahibi, he's my co-host on the Higher Standard podcast that we do. We started about a year and a half ago. We really try to dive into financial literacy. Our target demographic is somewhere between 18 to 40, but we have some that are older, some that are actually younger. We have listeners as young as like 12 and 13-year-olds. And
Interesting.
yeah, some that actually listen with their parents. And really what we try to accomplish is break down some of these reports in layman terms and help people understand what they mean and how this impacts you, broader scale of things. And we try to have a lot of fun with it too. So that's why you'll see that there's an explicit rating on the
Yeah,
podcast. So yes, we just like to have fun with it.
I listened to a couple of them. You can tell that you guys are close friends. So,
Yeah,
yeah.
we're okay with the banter, if you will.
Sure. So on the podcast and in your personal life, you're in touch with a lot of people in business and you talk about a lot of pressing issues for business. What do you think are the most pressing issues that people in business are thinking about today?
It'd be hard not to say inflation, right? Inflation and what the Fed's doing. What the Fed has done over the course of the last year and a half or so with raising interest rates up to 5.5% at the cadence at which they did it, although it's a nice bell curve shape where they started at 25 basis points, increases to 50, and then you had 475 basis point increases, and then now back down the bell curve. Although they have mentioned that they like to be data dependent, it almost reeks of some of these being a little predetermined. I think what a lot of business owners and what a lot of people in the commercial real estate side, and I mean, the economy as a whole, are trying to figure out is when will the Fed see enough for them to stop the rate hike? Because this whole process really has three phases to it. You have the first phase where the Fed's trying to tame inflation with their tool of raising the Fed funds rate, the rate at which they charge banks to borrow money. Typically, when they do that, a lot of things are supposed to happen. But because of the last 14 years, we've lost that elasticity in this tool that they use. So the lag effects we're really starting to see. So a lot of things like home prices should have started to come down by now. We should have seen employment figure go up, even though today jobs report came out and it increased from 3.5% to 3.8%, a step in the right direction, but still nowhere near where the Fed likely had anticipated it would be by now. Really, they're just hoping to see when will the Fed see enough for them to stop the rate hikes, because the second phase of this will be, okay, the Fed has reached their terminal rate, and then now it's going to be, are they going to hold? How long will they hold for? Because Chris and I routinely cite on the show that the pain for the consumer is not in the hiking of the rates. It's how long of a duration does the Fed hold the rate for? If you look at just the last three times that the Fed had to raise interest rates, the last time, June of 2000, they plateaued their rates at around 6.5%. They held that there for 7 months from 2006 to 2007 when they raised it up to 5.25. They held that there for 14 months. And then most recently in 2018, when they increased it to only 2.5%, they held it there for 8 months. So Chris and I will routinely joke on the show that, listen, you could get your wife pregnant now and she'll have a baby before the time the Fed decides to cut rates again. Um,
Yeah.
we'll see. We'll see where this all goes. But that's the fear, right? So they're going to hold that long. And that's where the pain for the consumer really comes in. And the next step from there will be cutting. But what people don't understand is when they decide to cut rates, it'll be a slow, gradual process unless something in the financial market breaks. And this is going to cause a lot of pain for a lot of people, not just businesses, consumers as well. Consumers, you think about, you got student loan repayments starting again in October. This is coming at a time when interest rates are at an all-time high, meaning people's credit card payments are through the roof again. Household debt is reaching all-time high, auto loans reaching all-time high. I know that the GDP figures that are being reported and printed are all positive and rosy, but if you look at things like these types of reports and what they're signaling, I think they're flashing red, and there's not a lot of hope in sight.
Yeah. Real estate for families, let's put it that way, continues to rise. Commercial real estate does also. I remember when home interest rates at one point in time in the 80s were like at 14%. And I bought a home during that period of time. So it's
Right.
not like it's impossible, but it was tough. And home prices, the cost of the house itself was much less than what it is today. If these prices continue to raise, right, and keep going up and up and up, it's more difficult to purchase a house. What is life change like for the middle class? It's not an option for them anymore. How do they build personal wealth? How do they change their expectations?
Well, this is really like the crux of what frustrates Chris and I. The Fed has been very communicative throughout this entire process. There's been a lot of rosy optimism that has been spewed out by a lot of media outlets out there. A lot of people were projecting second half of the year growth still for all the businesses, and people probably thought they were going to see some relief by now. Not too long ago, people had projected rate cuts, 2 to 3 rate cuts by the end of this year. But we're now seeing the projections that the first rate cut likely won't come till June of next year. What that ultimately means for people is that if rates don't come down and more inventory for homes don't come on the market, 2008 is not happening again because of the Dodd-Frank Act, and people have been underwritten much more strictly and making sure that they have the ability to repay their loans. So we have more stronger borrowers now. 92% of homeowners right now have a mortgage rate below 6%. And you can't get enough new construction online fast enough to fit the needs of everyone out there. Why this bothers me so much is my parents came to this country in the 80s. They're from Afghanistan, and they had to flee the country when Russia invaded Afghanistan. And they came from wealthy backgrounds over there, but they had to start all over when they got here. My dad rolled his sleeves up and he decided to learn how to become a mechanic and successfully grew a business on his own, and he has several employees who work under him. My mom worked 2 or 3 jobs, became a makeup artist for CBS News at one point, and saved up their money, and they were able to buy a little condo. And then from there, you hold it, and then the values go up, and then they were able to sell it, and then we were able to move to the suburbs. That's largely where the wealth of the middle class gets developed, is through that process. If it wasn't for them doing that and being part of that middle class and investing in their home, which primarily makes up the wealth of the majority of people in this country, if that is not a possibility for the next generation, it worries me. It worries me not only for them, it worries me for my kids. It worries me for my friends' kids and my family's kids, because the gap between the wealthy, I mean, the middle class will just widen further and further and further. And that is really what's alarming for me personally.
Yeah, it seems to me that the middle class is shrinking in our country. We've talked about one factor, real estate, because an awful lot of the security of the middle class has been in their personal homes and land and things. Other factors that are really contributing to the shrinking of the middle class.
I feel like with what's going on and how long this process could go up, or earlier you cited the 80s. What the Fed is really trying to do here is, I think what they're trying to preserve this as best they can before it gets out of control. That's why I believe they acted as quickly as they did and tried to get it under control, even though they probably acted a year too late. They said that inflation was transitory and that it would come and go. But they're more afraid of doing too little than doing too much. Because of what happened in the 70s, when they saw a resurgence in inflation, your 2 or 3 year problem ultimately then became a decade problem because they decided to cut rates a little too early. So I think that this is going to have a rippling effect. I mean, the middle class makes up of about 50% of the population. And if you think about 50% of the population and consumer spending and what that does, and consumer spending makes up of about 70% of GDP. So you can see how this can have a rippling effect of not only them, but like businesses as a whole. The scary part here for everybody, it's really driven off of expectations. how do people perceive the matter? And I feel like that's why you're hearing all this rosy optimism out there. But you have someone like Warren Buffett who came out, I think, earlier this week and sold off 8 billion in stocks and increased his cash position to over 142, 147 billion dollars. He's signaling what he sees ahead. If a recession is started, I believe that it's going to be a much deeper recession, and it's going to be a recession unlike one we've ever seen before because a lot of people have this built up equity still in their homes. So they can still technically tap into that if they needed to. But what if jobs come down? People aren't hiring as much. I don't believe that the JOLTS, the Job Opening Labor Turnover Survey, that's reporting that there's 9 million jobs out there. So basically, a job and a half for every unemployed person. That can't be accurate. People are leaving postings online and they're not removing them. So, debt crisis that people are in is really going to hinder them for a long time. It worries me how they're going to get out of it. I don't have the answer to that. I don't know what they can possibly do, but it worries me for everybody long term.
I have similar concerns that when interest rates go up, everybody, but businesses in particular, start holding on to their cash out of necessity. When you look at the business to business community, businesses also stop buying from other businesses. They let their inventories dwindle. They don't make new advantageous moves to the business. They stop being aggressive and they go into their shell. And part of that also then is they lay people off because once business is slower, then they don't need everybody they have. So I don't think that the unemployment picture is very real right now.
Right.
And
I completely agree. And to your point, recessions are started one of three ways, but all three things will happen at some point in the recession, right? So if we're starting to see businesses become less profitable because consumers aren't out there spending. What happens when businesses aren't as profitable? They have to shrink in size, meaning they're going to ultimately have to eventually lay off workers. And when they lay off workers, what does that mean? People are unemployed, there's less consumer spending out there, and it's just a cycle effect. Now people are out there spending less and it's causing even more and more. And it takes a long time. The Fed won't be able to just turn on the switch,
no,
slash rates. People aren't just going to go back out there again. So, yeah, expectations really, really influence behavior. The behavior that gets influenced ultimately impacts inflation.
I don't mean to overlook those who are below the middle class. It impacts them the greatest and the most harmful, for sure. Try to conclude this sad conversation with something fun. I appreciate that because that was a lot of honesty and clarity and some good historical reflection on what this business process and recession is like.
Just one last food for thought that I really feel like needs to be driven home is right now the tightening lending standards because I'm an underwriter by trade. That's what I do for my day job. We haven't even began to see the full effects of that. Right now, there's not as much lending going on, not because there's a credit crunch. The credit crunch hasn't happened yet. Banks right now are holding back, waiting to see what the Fed does. If a bank goes out and makes a loan today, when the Fed comes out next month and raises rates again, now that loan isn't as good as the one that they could have made next month. So they're going to hold and wait for that. Once the Fed decides that we've reached our terminal rate, then the banks are really going to be picky and choosy with who they decide to lend to. Who's really going to hurt from this are businesses that use lines of credit, and those loans are generally speaking 1 to 2 years, and they need to get renewed. Some of
Yeah.
their loans are up for renewal now, and they use it as working capital to hold themselves over for the next month or for 30, 60, 90 days while their accounts receivable come in. Now, what's going to happen when banks don't renew their loans? These are the things that are really going to accelerate the process that we haven't, although the Fed has increased their Fed funds rate and we're starting to feel a pinch. That's what we mean when the pain is really to come in the holding process. Hopefully, people are preparing and
I hope
educating
they are.
themselves. Yeah.
Yeah. Yeah. Hope they are. It's kind of rumored. It's not really rumored. It's true that you don't really participate in social media,
Oh
right?
yeah. I saw.
And
I saw.
you,
I saw that you wanted to ask me this. I thought it was pretty
yeah,
interesting.
tell us why you've made that decision and how it's been a benefit or that sort of thing.
This started out actually when my wife and I first got married. We were the first of our entire friends to get married. It was actually before Instagram and all that. And my wife and I made a decision that this is not something we want to partake in. We see the drama that's being caused amongst so many other people, and this
So you
just
met without any of that stuff.
correct. I
Yeah.
actually got married to my best friend's sister. So that's a whole nother story for a whole nother day. Just say that he gave me his blessing and thought that I'd be the best man for the job. So I wanted to really make sure that we started our journey off together with the right step, and we thought that we didn't need any outside distractions or anything of that sort. I never really felt like I was missing out on anything because I would still keep in contact with my close friends via text message, via phone calls, which I like the personal interaction a little bit more.
Yeah.
But as of recently, my co-host likes to poke fun that since we've now started the podcast and we've been growing the podcast successfully at a nice rate, that really need to start a page to engage with some of the listeners. So over the last year, or not even years, I should say maybe 6 months or so, got an account for the first time. Believe it or not, it gave me a lot of anxiety. And I said, I don't even know. I feel like I'm like, 70 years old. I don't know what to do with this thing. I don't know what I can say. I don't know what I can't say. So I just tap in, I engage with some of the listeners from time to time. And the thing that I feel like it's helped me the most is still being present with my kids. That to me is the most important thing. I know that I'm an underwriter by trade and I'm a co-host of a podcast at night, but at the end of the day, my number one title is dad. I want to be the best dad that I could be, and being there for my kids and being present and not caught up in everything that's going outside the house. That to me means the most.
I understand. Still raising a child myself. I feel the same way. It's harder for me to get him to engage.
Yeah.
He's,
Yes.
my wife still gives me a hard time. She's a little younger than I am, so I still struggle to use some of these. It's like, how do you do that?
I
I-
I gotta Google everything on like how do you post this on that, and I have no idea. But I think with the level of restraint that my wife and I have showed over the last 12 years, it's made the transition very easy. That or I can log in, do what I need to do, and then I'm off for the
yeah,
day. We practice something at home where at night after when it's dinner time, phones are off to the side, and we're all focused on each other. And
yeah.
'cause this right here is really important. But the few engagements that I have had with some of the listeners have actually been pretty pleasant and actually really insightful. I do, in fact, actually enjoy it, and I feel like I'm using it the right way. That's how it feels like.
Well, it sounds like you are also. So that's good. Well, Saeed, thanks so much for joining us today. I appreciated your insight, especially as it relates to the real estate market and middle class. One other question I'd like to ask you is there's a lot of empty office spaces
Right.
because we went through the pandemic and everybody was working from home, and now it's been hard to get people to come back to the office. Some businesses literally closed all their offices. So that impacted the commercial real estate market. Has there been a real impact on commercial real estate because of this? And is that hurting us?
Oh, absolutely. I mean, over $1 trillion of loans are coming due by 2025. When these properties get underwritten, I'm not sure how much of the listener base here knows about cash flowing a property, but a certain level of vacancy is taken into account. And typically, what real estate investors like to do is they like to get to a point where their debt service coverage ratio is somewhere between 1.20 to 1.25 to make sure that they're still cash flowing positively. Well, when your vacancy rate goes up, you're no longer cash flow positive. So forget the fact that they won't be able to refinance their current loan anywhere. They're going to have to bring liquidity back in, back again to why it's so important that we talk about the Fed and raising the interest rates. When the Fed decides to raise interest rates, what do we know that does? That's quantitative tightening. Basically, all that means is they're pulling money out of the market. So when they pull money out of the market, now these businesses that have these commercial real estate loans aren't going to have enough liquidity to pay down some of their loans to refinance maybe one, maybe two, maybe a few, but they have large real estate portfolios. I know that there's a big push. I've seen a few commercial real estate properties in New York that either have been converted or have started the converting process into housing. And actually, there's another place, I can't recall where, I want to say Minneapolis, where they have fixed their own inflation problem there by creating some housing through some of this commercial real estate. But the zoning process alone, you have to get the city to be on board with this. You got to get people on board. The amount of money that it would take, who's going to lend to a business right now to convert a property like this? There needs to be a huge backing. So, long story short, there's a major problem there. And one of many reasons why I feel like Warren Buffett decided that not this is it, like the writing's on the wall. I can see commercial real estate's coming due. You got student loan repayments coming back. What's going on in technology? Do we have an AI bubble? It feels like nowadays tech companies just say the word AI and their valuations go through the roof. There's so many factors that are out there right now that
Like you
it's
said, there's so many factors, but they're all early in their what I'll refer to as an impact cycle.
I I
right?
agree.
It's like they're all tracking together because they're all experiencing the same things. And when they all really impact the consumer marketplace simultaneously, if that happens, that's when we'll really know what the story is.
Yeah, and it feels like it's all coming together at the same time for a recipe of disaster.
It's kind of scary, but I know we'll get through it. We always do, but it won't make us feel comfortable in the meantime till we get there.
Right, and why it's important to understand what options you have out there, how to prepare better for these types of situations. I know a lot of people are out there right now living paycheck to paycheck, and it's hard. It's really hard to start during a time like this, and you wish maybe you had started sooner. But the number one thing that people can do is educate themselves, learn, even if it's step by step, just progressively get better day by day, and you'll be better prepared because these are cycles. This will happen again. It may not happen like this again, but some form or another will happen again, right?
Yeah,
So it's never too late to start learning now.
my friend, that is good advice. Thanks so much for being with us today. Good
I appreciate
information.
you having me on, Carl. Thank you so much.
Yeah, you bet. Have a great afternoon. We'll maybe check in down the road once some of this stuff makes a turn and we'll talk about it again.
I would love that. I would love
Yeah.
that.
Until next time, everyone, stay connected.